Welcome back. President Trump hasn't even taken office yet, but we're getting a steady flow of deal news in recent weeks. Today, QXO making an $11 billion bid for Beacon Roofing after a flurry of biotech deal making earlier this week from J&J, AbbVie, and Eli Lilly. Goldman thinks transactions overall could jump 25% this year. But my next guest cautions we're still in a honeymoon period as we await what antitrust will actually look like under Trump 2.0. Joining me now is Axios business editor Dan Primack. It is the trillion-dollar question, Dan. Welcome.
Thanks for having me.
So I think people are saying, OK, most likely this is an administration that will allow, if not be excited for a lot of deal making to happen. But there's always the chance that the new regulatory chairs maybe take a little bit more of a cautious approach.
Yeah, if you look at the people who Trump has nominated to be in charge of antitrust at DOJ and then who he's nominated head of FTC, neither one of them are doves when it comes to antitrust. Now, there's not an expectation that they will take as broad an approach as the Biden people did, Lena Khan, Jonathan Cantor, et cetera. But if you look at their histories, they are pretty tough. And if you go back to Trump 1.0, and I think a lot of people seem to forget this, his DOJ and his FTC sought to block deals in all sorts of industries. It wasn't just big tech. It was kind of across the board. Again, more lax than what Biden was, but it was not a get out of jail free card for everybody.
No, and I mean, there are, obviously this is a boon if it is going to happen for a lot of the banks. And Goldman has a nice list of, some of the candidates that might be next. They're putting the odds still at like 15 to 30%. So these are not slam dunks.
They're not. I mean, let's remember, if we were having this conversation this time last year, we were talking about expecting a huge M&A boom in 2024. Now, different reasons. That was because we were expecting lots of rate cuts, but we had that expectation the year before we had that expectation. In short, bankers always talk about expectations for a big deal boom because they want clients, they want deals. I'm not suggesting that that's why the people who wrote that particular report are expectations that it's such a quid pro quo. But, bankers are genetically operated to try to get deals going and get clients in the door. Yeah,
the Pro has the full list, but I mean, there's companies like Electronic Arts on here, TripAdvisor, so on and so forth. I mean, look, it does feel to me, Dan, like something's different. I think we've had more announcements in the past 3 weeks than what I can remember in the past 6 months, literally, of last year. So maybe it's just because I'm paying closer attention. I mean, what would you say has been the actual pace here?
It's a little hard to tell. So I agree with you. It's felt that way. And the reason I say it's a little hard to tell is two things. One, you talked about those biotech deals that got announced earlier this week. A lot of those were tied to the beginning of the JP Morgan healthcare conference. And we often see a couple big deals get announced at the beginning of that conference. We don't know when those are really signed. People try to wait to get that out that Monday. And then because of the way last year worked with the kind of almost an entire 2 weeks off with Christmas and New Year's, the way they fell in the middle of the week, you basically had no news come out at all for a couple of weeks. So things got backed up. I think really, from my perspective, like middle of February is when you get a real chance because those deals are really the ones that were getting negotiated now, not ones that were already in the pipeline just getting papered over. Yeah,
and I think that it all is and by the way, the investment banker shares have done incredibly well. You look at Piper Sandler, you look at Stifel, we're talking Goldman, 70-80% gains over the past year. So they are anticipating that there is going to be more work to do. The IPOs are a piece of this as well. I've heard people in the industry say, you're less likely to take a company public if you don't think they might be acquired down the road, right? It just provides more stories to tell and more possible excerpts and so forth. And on that front, it's a little bit more quiet lately.
It has been. I mean, look, it's been quiet for years on the IPO market, and for two reasons. I mean, one, when it comes to kind of the private tech startups, kind of the venture capital-backed startups that usually are the buzziest IPOs, there's been so much money still in the venture capital market, in the late-stage venture capital market, and some structural changes where people are kind of buying each other out as private companies, that those big buzzy names just haven't had the need to come to market like they would have in the past. And then, private equity firms and other private companies that have, should be going public, they've kind of been scared off for a while. And I think it's going to be very interesting to see. We've been in the midst of this bull market. They should have gone. Right. Most companies that did go public, even in the past year, have performed really well. They performed well on the pricing, and they performed well in the aftermarket. There's been a bit of a lack of courage.
If I were a big conglomerate or what have you, and I wanted to do a really transformative deal, I would definitely be watching what's started to be announced to see how it goes over, if there's any pushback, if there's any trial balloons floated, if there's anything that shows up in the media. And if it seems like full steam ahead, maybe I'm starting to prepare my plans.
I think so. And I think there's going to be, particularly on the tech side, someone's going to have to take a really big swing on the sort of deal that you and I would see. And our first thought would be, oh, that might be a problem from a government perspective.
Right.
Someone's got to take that swing and take the chance. I mean, it's very easy for me to say I'm not the one who has to sit there and, put my entire company on hold for 6 months or a year. But if somebody takes that swing and it goes through, I think then the floodgates really, really open.